In the last few years, Starbucks has faced some serious challenges. They've cycled through 4 CEOs in under 4 years and are grappling with their steepest revenue decline in 15 years, excluding the pandemic. In this video, we're breaking down how Starbucks became the global giant it is today, why absurd, complicated orders might be brewing up trouble, and whether Howard Schultz, former CEO and chair, might step in for yet another comeback. The Starbucks story begins in 1971 as a small Seattle shop selling only freshly roasted beans, not coffee drinks. Fast forward to 1981, and Howard Schultz, a curious manager from their filter supplier, visited the store and had the strongest cup of coffee he had ever tasted. Howard Schultz's journey to becoming Starbucks' visionary leader is as inspiring as it is unconventional. Raised in a modest Brooklyn household, Schultz worked his way through college, even selling his blood to cover tuition. During a visit in Italy in 1983, Schultz fell in love with the Italian coffee culture and dreamed of transforming Starbucks into a similar experience. Despite initial pushback from the company's founders, Schultz went on to start his own chain, Now, which flourished and ultimately enabled him to purchase Starbucks. From there, Schultz built Starbucks into a global powerhouse it is today. Under Schultz, Starbucks became more than a coffee chain. It became a cultural icon, from introducing health benefits for employees to pushing fair trade practices. Schultz was seen as a progressive corporate leader. The company's reputation soared, even through financial storms like the 2008 recession, where Schultz returned as CEO to rescue Starbucks from decline. Schultz's strategy focused on making Starbucks a premium product. He curtailed expansion, shut down underperforming stores, and restored Starbucks' image as a luxurious, worth the price experience. And it worked. Starbucks market value skyrocketed, jumping from $5 billion in 2008 to nearly $100 billion by 2019. Starbucks has expertly navigated price increases, successfully passing rising costs on to consumers due to factors like higher wages and coffee prices. Between 2014 and 2016, they raised prices 4 times, twice in 2016 alone, to maintain healthy margins. So, how did things go off the rails? In recent years, the complexity of Starbucks' menu has exploded. There are now 440 million possible ways to customize a Starbucks latte. While this variety has been profitable, bringing in more than $1 billion annually, it's causing operational headaches. The more complicated the order, the harder it is for baristas to connect with consumers, one of Schultz's original goals. At the same time, the rise of mobile orders and drive-through means fewer people are even stepping foot inside Starbucks' expensive, cozy real estate. Today, over 70% of orders come from drive-thrus, mobile apps, or deliveries. While convenient, it distances Starbucks from the Italian-style coffee culture Schultz originally envisioned. One of the key factors driving Starbucks' pricing strategy is rising costs, particularly for wages and coffee beans. The prospect of increased minimum wages worries some investors, but Starbucks already pays above minimum wage and is known as a top-tier employer. In fact, a wage increase could make it harder for competitors to keep up, ultimately benefiting Starbucks. On the commodity side, coffee prices are climbing after years of stability, driven by droughts in Brazil and Vietnam, two of the world's largest coffee producers. With demand outstripping supply, coffee bean prices are pushing higher. Starbucks has responded by nudging up prices slightly on drinks and bakery items. While this may seem small, about 0.5% on average, the question remains, will consumers continue to pay premium for their Starbucks fix? Starbucks is betting that with a strong economy and higher wages overall, customers will keep coming back, even with marginally higher prices. Beyond the store experience, Starbucks is facing stiff competition globally, particularly in China. While China was once Starbucks' fastest growing market, local chains like Luckin Coffee have surged ahead. Add in inflation, and many consumers are now turning to cheaper alternatives. Starbucks' attempts to offset costs with price hikes haven't gone unnoticed, leading to a 30% drop in stock value this year. Earlier this year, former CEO Brian Niccol stepped in as Starbucks' new leader after just a year of leadership changes. With so many moving parts, Starbucks is at a crossroad. Will Niccol steer the company back on course, or will Howard Schultz make yet another return to the helm? Starbucks has proven time and time again it can adapt to changing markets and overcome challenges. But with rising costs and a fiercely competitive market, the road ahead will require careful strategy and bold leadership. Will Starbucks continue to thrive, or will they face more bumps in the road? If you found this video insightful, give it a thumbs up and subscribe for more deep dives into the business world. Thank you for watching, and we'll see you in the next video.